there have been 9 rate hiking cycles in the last 50 years. Only 2 of them arguably have turned out to be what you'd call a soft landing, so that's barely 20%. I don't think that the odds are in the Fed's favor, so we should probably prepare for a full-blown recession. The Fed's balance sheet was almost $9 trillion a couple of years ago. They have really started to trim it back. We're at about $7.5 trillion. The bad news is that takes a lot of liquidity out of the market. That's probably going to exacerbate a recession. And I'm not sure how much farther they're going to be able to shrink that balance sheet. And when they stop shrinking it and start expanding it again, that's all bets are off, especially in the precious metals space. In the next 12 months, there's about $8 trillion of US debt that's maturing. And the Treasury has been criticized a fair bit for not issuing enough long-term debt when rates were low. So as the rates likely start to come down this year, watch for the Treasury to start issuing more long-term debt. Now, from one point of view, that makes sense. From another point of view, it's going to make their servicing their debt worse, because even though long-term debt will be at lower than perhaps current rates, it'll be at considerably higher than rates a couple of years ago. So that will just make, as I say, the annual deficit that much bigger and much more difficult to service longer term. With switching gears and looking at the commodity space overall, a survey by Bank of America looked at fund managers and shows that commodities are the most underweight versus bonds that they have been since March of 2009. So really, commodities are looking like a tremendous contrarian play at this point. One of my favorite charts where I superimposed the rate hikes and the Fed funds rate against the silver price. So what we have is that green vertical line shows you when the Fed started to hike rates. The gray line is the silver price, which did pull back, has stayed within a pretty stable trading range in that yellow shaded area ever since, and actually has started to move a little bit higher in the last sort of year or so, and year and a half. And what's interesting is what happens when the Fed starts to cut rates, because looking back on the left side of this chart around 2020, the early 2020 when the pandemic hit, Fed started to cut rates dramatically, and look what happened with silver. It dipped initially in the pandemic panic, and then exploded higher from about $12 to $30 in a matter of about 5 months. So I think that we're in a narrowing price range right now. We're looking forward to the next set of rate cuts. Now, looking at the supply demand more generally in silver, the last 10 years, from about 2010 to about 2020, we had more or less stable overall demand for silver. But then in the last 3 years, it's absolutely exploded higher. And this is average including 2023. So if you did the average of 2010 to 2020, the actual average would actually be lower. So it has pulled back last year. We'll talk about that a little bit in a few more slides, but I think we're going to start to see that at very least even out and start to move up again very soon. Another survey by Bank of America Global Research asked the 13 largest primary silver miners where they thought mine supply was going over the next few years, and they all feel on average that mine supply peaked back in 2016 at 900 million ounces, and they don't see mine supply going anywhere near that level anytime soon. In fact, just last year, despite near record demand in silver, mine supply was down 18 million ounces, so that's about 2% in a year where we're well above the last sort of 10 to 12 years of average demand in silver. I looked at some of the projects that are starting to come online. So in that red oval at the top, you have Prognoz, that's in Russia. You have the Vares silver project, that's in Bosnia. You have Terranera that's not coming online, that's in Mexico, not coming online until the very end of this year, not going to materially impact supply. You do have a couple of decent-sized miners and mines that are ramping up, growing their output, but more than likely we're going to see supply flat again this year. What's driving it? Mexico is the world's largest silver-producing nation. Their output last year was down 12%. A lot of that had to do with the Newmont mine Peñasquito, which was offline for about 4 months. One of the world's largest silver producing mines. But that's really a challenging environment. Peru, arguably the world's #2 silver producer. They've seen their production fall for about the last 7 years. They're down to levels that are matching about 20 years ago in terms of silver production. The environment is very challenging for silver mining. And here's one of the big reasons. First half of last year, overall, all-in sustaining costs to produce an ounce of silver were up 57% over the first half of 2022. So these are the kinds of things that miners are facing. Higher costs due to inflation. In some cases, it's currency exchanges that they're dealing with. Local currency is rising, making their production and their costs more expensive. Something that we've seen before, but primary silver mines only account for about 25% of all the silver mine output. The other 75% is byproduct production that comes from mining things like gold, copper, lead, and zinc. So what happens if we have a recession? It's very difficult to ramp up when you have higher demand. It's relatively easier to pull back on production if demand is slowing. So if we have a recession and base metals start to see softer demand, you could very well see less production of some of those metals. That will likely start to affect the byproduct silver production. Again, shrinking supply of silver from mining. So this has the Silver Institute expecting that we're going to see these deficits last for years going forward. Another survey, Bank of America, looked at the energy transition metals, things like copper, nickel, zinc, lithium, cobalt, platinum, and they projected out to 2030. And their projections show them that the single metal that will have likely the biggest deficit is silver, and it could be as much as 120% of its current supply. So that's just tremendous, hard to fathom in fact, but that's really what the kind of environment that we're facing. There was an overall drop in terms of demand last year in silver. That mostly came from 3 sectors: jewelry, physical investment, and silverware. Now, it's important to look at 2022. You can see that if you look at 2022, that column right there has, and you compare it to the years before, these were all-time records in each and every one of those 3 categories. So for 2023 to dial back somewhat and come closer to, reverting to the mean and closer to average, and still, in many cases, still well above the last sort of decade's average. Not that surprising. I think that, again, recession likely this year, investment demand is likely to kick in, and we're going to see that start to ramp back up, and that could be the wild card. Switching now to industrial demand. The Silver Institute thought that last year industrial demand was going to grow by 4%, and that's what they said back in April. In November, they revised that, and industrial demand had actually grown for silver by 8%. So it was twice the growth rate that they had expected. Industrial demand is now 632 million ounces a year out of about a billion ounce a year market. So silver has become increasingly an industrial metal. It's now over 60%, or at least last year it was over 60%. In 2022, Solar was 25% of industrial demand. In 2023, it had already grown to 30% of industrial demand. So we're now at 190 million ounces of silver going to solar alone, which is about 20% of the entire silver market goes to this one application. It's really just tremendous. You cannot look at the silver market, not pay attention to what's happening in solar, and it gets even better. Because 4 years ago, the two new technologies in solar being TOPCon and HJT, which take 50 to 150% more silver per panel, represented just 10% of manufacturing capacity. Last year, that had grown to 35%. Tremendous growth in 4 years. And again, remember, these technologies take a lot more silver per panel. The Silver Institute now is forecasting that for 2024, TOPCon, which is 50% more silver per panel, is going to basically dominate the technology that we see for silver panels and represent 50% of all new solar panels being manufactured. So again, even if the number of solar panels were flat for the next several years, the adoption of the new technologies that requires more silver per solar panel is still going to grow the amount of silver from the solar industry. So now the chart on the right is the thrifting that you see happening over the last 10 years or so. That's the amount of silver that is required for each and every panel. So that, of course, manufacturers look for ways to cut cost and still have the same output, the same quality, and they find ways to do it. But that line has been flattening, and I think that especially with the adoption of these new technologies, we're going to start to see that we're at an inflection point. That line is going to start to ramp up from there, and we're going to start to see considerably more silver going into each and every panel. Interesting look at the tax incentives that go to the solar industry. This compares solar with wind, coal, oil and gas, and nuclear. And solar gets by far more tax incentives than any other energy source. In fact, it got, in 2022, 300 times more tax incentives than nuclear, got 136 times more than oil and gas. So clearly, solar is becoming the source of energy. In fact, the Energy Information Administration thinks that by 2027, which is just 3 years away, solar is going to be the single largest source of energy worldwide. It's going to easily take over coal and natural gas to be the top source of energy. And just a little bit of a sort of a quick look at what's happening in technology with silver and transportation. Just recently, Toyota, along with Stanford, have actually put out some research showing that they found a way to use silver for the anodes in batteries that are used in hydrogen fuel cells. And this has been one of the big barriers for fuel cells, is that it's expensive because they've used platinum group metals in the anodes, and they've found a way to substitute that with silver, which is a fraction of the cost. So we could, if this actually takes on a new life, we could see actually a brand new big market for silver and potential shift, in fact, in terms of EVs, and seeing hydrogen start to gain a lot of ground on the battery EV battery technology. Switching to pricing and technical analysis a little bit, we've got here the gold-silver ratio versus the US dollar. And they're pretty highly correlated. So my view is that the dollar is in a long-term downtrend. And if that plays out, then the gold-silver ratio will follow it. And when the gold-silver ratio falls, that tends to mean that silver does well, and does well versus gold. And actually, that's very bullish for both metals. When the ratio falls, both metals we've seen historically tend to do very well. So if we look at a long-term chart of the US dollar, this certainly indicates that it's been in a long-term downtrend. We saw it peak, this is the index, we saw it peak at 160 back in about 1984, 1985. then peaked around 2002 at 120. More recently, it was at 114, the previous peak. So you see these successively lower peaks. I think that within probably a year and a half, we're going to see the dollar index challenge the 90 level. And again, cutting rates this year by central banks is going to help tremendously, lead to a lower dollar, and again, fuel potential new rally in precious metals. An interesting chart looking at silver junior ETF versus the silver price. If you look at what happened in 2016, silver and silver juniors absolutely exploded higher in about the first 7 months of the year. Just the ETF outpaced the price of silver by 8 times. It was just an incredible performance. And since then, over multiple years, we've seen that ratio start to trend downward successively over those years. We may have put in the last several months, a new bottom. What's interesting is that bottom is slightly higher than the 2016 bottom. And if it plays out like we had the last time, we could be really setting up for a tremendous new rally, especially in the silver junior space. Remember that even in this kind of environment, discoveries are rewarded. This is the price chart for Hercules. Many of you may know how that has taken off. They had a big discovery last fall. Share price exploded. And as I say, this is indicative of the kind of thing that can happen in this space. That's why we're here. Again, looking at the technical price of silver, if you look back on a longer term chart, in that oval on the left-hand side, you have what happened during the financial crisis. So you had a pretty big correction in 2008. You had a narrowing, it recovered. You had a narrowing, you had that triangle forming towards the right, and then the silver price absolutely exploded higher from about $17 to $49. And we seem to have a similar kind of technical formation right now. So potentially we're going to see that kind of, or something similar, play out over the next several months. Remember, silver is a unique asset. It's the only metal that is monetary, a monetary metal. It's an inflation hedge. It's certainly critical and essential to the Green Revolution, and it's historically undervalued. Silver is the only metal of any metal, really, if you look back over the last 40 years or so, that is well below its all-time high. So if you're going to participate in this space, you have to have a game plan. Silver and silver equities, really, as I say, they're massively undervalued. Really, now's the time to take advantage, do your research, look to scale into positions. There's no reason to rush. Look for companies that have great management, have projects that have the potential for scale and grade, ideally cash, favorable jurisdictions, and infrastructure. And again, reminds me of, I was at a conference in September in Vegas, and someone asked me, do you gamble? And I said, only in junior minors. So that gives you some idea. And be patient, because the patience, if you look back historically, patience absolutely is rewarded in this space. So you know what I do. Silver Stock Investor is my newsletter. It's twice monthly, covers the entire silver space in terms of everything from physical and ETFs to junior explorers. It's the only silver-focused investment newsletter that I know of, and I give you my thoughts on the macro environment. I do some proprietary research on silver, different aspects of the silver market every month, and full analysis of new recommendations and updates on companies. If you want to follow me, silverstockinvestor.com. I'm on X, the old Twitter. I'm on LinkedIn. And if you want to get an overview of the potential, the generational opportunity in the silver space, my book, The Great Silver Bull, you can find that on Amazon. It's also in an audio version. And thank you for your time.